Hey everybody, Rob Maurer here. Welcome back to Tesla Daily. Today we are talking about an update from Tesla on 4680 battery production progress. We've also got updates on Tesla in China, Taiwan, and a couple other items as well. Looking at the stock, the sell-off in Tesla continues down 11.4% today, closing at $109.10. The Nasdaq down just 1.4%. And we continue to have very high volume. Today was the second highest volume day of the year, just over 200 million shares traded. So day by day, in the absence of Elon Musk selling, it's looking more and more likely like we've got a big fund, maybe multiple big funds divesting from Tesla. Of course, we don't get any visibility to that until updated 13D filings, and those don't come until a few weeks after quarter end. So we'll keep an eye on Bailey Gifford, keep an eye on Capital World, some of the bigger funds, but we won't have much visibility there for a little bit. Now, on top of that possibility, you've also got things like margin calls, stop losses, momentum trading. Those things can all feed off of each other, and during those periods of time, it can feel like the market's main goal is to inflict as much pain as possible. That's pretty much the point. The market loves volatility. It loves making money off of that volatility. That can happen on the way up with short squeezes, as we have seen in Tesla and other stocks, and it can happen on the way down, as we have seen in Tesla in the past, particularly in 2019. If you're sitting here and you're in margin and you're thinking Tesla can't possibly go any lower than this, that is the exact time where Tesla will go lower, because that is when the market can take advantage of that mindset. You don't have to look far back in the history of the stock market to see plenty of examples of stocks being priced irrationally for short periods of time. So if you find yourself sitting there and saying, well, X can't happen, it just wouldn't make any sense, there are plenty of examples to prove that logic wrong. So the point there is just to be careful. Yes, I think Tesla is significantly underpriced, and I think the years to come will show that to be the case in hindsight. Yes, the price to earnings multiple is compressed, especially on a forward-looking basis, but none of those things mean that Tesla can't go lower. It very well may. Maybe not, hopefully not. The point is just to walk through those scenarios, even if you don't think they're very likely, and make sure that you're positioned to withstand them if they do come to fruition. There's a reason that the quote, markets can stay irrational longer than you can stay solvent, is so well known. All right, moving on from the stock for a bit, although we'll touch more on that later, we do have an update from Tesla on 4680 battery production. On Twitter over the weekend, Tesla said congrats to the 4680 cell team on achieving 868,000 cells built in the last 7 days, equal to 1,000 plus cars. So although thus far the ramp of the 4680 has probably gone a little bit slower than what many of us, I think including Tesla, would have hoped for, it's really exciting to see this progress now moving into more of a volume state. Remember, back in February, Tesla had just tweeted about crossing 1 million cells manufactured in total. Now here, less than a year later, they're not too far off from hitting that output in 1 week. And once they get this process locked in, it becomes simpler to replicate it elsewhere. Of course, that is already happening at Texas, and just to note, this picture does include 2 photos. One is at Fremont and one is at Giga Texas, so just as a point of clarification, this does look like the combined output from both locations. So as Tesla noted there, this should be enough cells for more than 1,000 vehicle packs per week, if we assume these went to the rear-wheel drive Model Y that Tesla had been selling the 4680 cells in originally for a bit there, which had 828 cells per vehicle. I'm not sure why Tesla's using 868,000 as the milestone here. Maybe they're going to add more cells into a 4680 Model Y, not sure. But either way, right around that 1,000 vehicle mark. And then from the information collected by Jordan Giesecke at the limiting factor, it looks like this would be about 75 megawatt hours worth of cells, or about a 4 gigawatt hour per year annual run rate. So for Tesla scale, that's still relatively small, but this is starting to become significant volume and growing rapidly. As Drew talked about in the Q3 call, 4680 output was up 3 times quarter over quarter in Q3, tremendous growth. And they said at that time that they were tracking for production to exceed cells for 1,000 cars per week in Q4, which they have now achieved. So I think progress here is looking really good. Drew had said that they're going to shift from being 100% focused on the ramp to being more focused on costs as they start to hit this point. So we'll have to see how the ramp progresses as that focus shifts a little bit, certainly not entirely, but a little bit. But progress on the cost front will be just as welcome, as I think this has been a huge drain on Tesla's cost, particularly in Q2 and Q3 this year. And making progress on cost, that should make things more efficient, which should help their ramp. And as things are more efficient and less costly, they can replicate those things more quickly. So they definitely work hand in hand. So obviously the sentiment and the market's focus is very much on negativity right now, but every day, 100,000 people are going to show up to work at Tesla and continue to grind away at these problems, continue to make Tesla a better and stronger company. All right, speaking of some of that negativity, next we're going to talk a little bit about Tesla in China. We've got a number of updates here. We'll start off with insured vehicle numbers, and we have a couple updates on production as well. First, we've got insured vehicles for the week of December 19th through the 25th. it has fallen about 15% week over week to 8,915 vehicles for this week, down from 10,250 from the week prior. So my view on this continues to be that this is capped right now by demand. Obviously, there are things impacting demand overall in the China market right now, as we've talked about on numerous occasions. But it's very difficult at this point to make a case that if the orders were there, Tesla could not have found more supply to accommodate higher orders and higher deliveries than in China during these weeks. Certainly logistics could be contributing to lower numbers here, but I think that case is difficult to make as well, given the numbers that we're seeing BYD put up. They continue to increase week over week. As I mentioned last time we looked at this is plug-in hybrids and battery electrics, but it's just speaking to increases being possible even if logistics are somewhat challenged by COVID situations. That definitely is a factor, as we'll talk about more here in a second. And you could argue that there are differences between BYD and Tesla in terms of where those deliveries are taking place. So maybe different logistics because of that. But my point of view, and it's fine if you don't agree with it, but my point of view based on the evidence that we're seeing, I think that most strongly points to an order constraint right now for Tesla in China. Anyway, looking at the total quarter, there is now 6 days remaining in the quarter after these weekly insured numbers. Tesla should be in the ballpark now of about 116,000 vehicles quarter to date domestically in China, which would be about 4,000 shy of a record with 6 days to go. So it'll be close, but this may still be a record quarter for Tesla in China, though based on the pricing, they probably would have had more profit last quarter. So people could talk about Elon all they want. As I've said, I do think that has been a contributing factor, but I still think the predominant concern in the market right now is forward growth for 2023, which I think the market is very concerned about dramatically slowing or even stalling out. Hopefully Tesla can prove that wrong. Hopefully Tesla can make enough progress on cost of goods sold reduction that they can maintain really strong margins, but the market is not giving credit for that right now. It's very much in a wait and see mode for Tesla. Anyway, I had mentioned the logistical impact of COVID. As I'm sure many of you have seen, cases in China are just absolutely skyrocketing right now. And although BYD has maintained strong weekly insured numbers, they have commented on their production covered here by CNN, saying they have to slash production by 2,000 to 3,000 vehicles per day, as they've had more and more workers who are unable to work at the moment. BYD's vice president said that the outbreak has severely impacted their production. 20 to 30% of employees are home sick, and that they will fall short of their December production target by 20 to 30,000 vehicles. So the market is challenging and it has different impacts on different players, but it's not like it's just smooth sailing for everybody out there in China right now. As for Tesla production, Reuters did report this weekend that Tesla had suspended production at Giga Shanghai. So whether you want to believe the previous reports or believe that this is a new change because of what has happened with the COVID situation in the last couple of weeks, or some combination of these things, it does look like Tesla will be shutting down production at Shanghai for at least a week here to end the quarter. Apparently, Global Times reported that in an interview, Tesla China told them that, quote, the Shanghai plant will still maintain efficient production and excellent output in 2022. Vehicle production will be carried out as planned for the annual production line maintenance next week, that is this week. At the same time, after a year of hard work, the workers also took a break during the maintenance period of the production line. The charging piles and other workshops have not stopped, and the media's statement that the factory has stopped production is not entirely accurate, end quote. So obviously we've had a lot of different reporting on this over the last month. Those reports have come from a lot of different sources. Some have been denied or commented on by various sources within Tesla China. So this has been all over the place, but any of those denials seemed like they would have been just picking out small bits and pieces of the reports rather than denying the overall premise, which unfortunately I think causes a loss of credibility for any of these denials in the future. Even if they may have been technically correct, then you have to account for that possibility in the future that the report is correct but being denied on a technicality. So Tesla says this is for maintenance. Hopefully that is the case. Hopefully we see some production improvements out of this, at least in terms of efficiency. Of course, there's the COVID impact as well, but we did have reports of this shutdown prior to the COVID situation changing so dramatically. So I think it's probably a combination of things. Tesla probably saying, hey, orders are a little bit low right now. Let's take this opportunity to do any maintenance that we need to, since maybe production is running a little bit hot relative to the current order rate. If that were not the case, I think Tesla would probably work through this period. They've worked through this period in the past, and we just had a significant shutdown for production line upgrades. Plus, in January, there should be an opportunity for maintenance around Chinese New Year, which Tesla last year in large part worked through even producing vehicles, so accomplishing some maintenance during that period should have been or should be achievable as well, and that happens just a few weeks from now. So whether it's needed, whether it's opportunistic, I think the market is looking at that and saying, we're not super convinced at the moment. As for January production and Chinese New Year, Reuters did also report that according to an internal schedule that they had reviewed, Tesla will only be running production from January 3rd to January 19th, so 17 days, with production stopped from January 20th through January 31st for an extended break for Chinese New Year. So if this does end up being accurate, maybe we're looking at around 51,000 vehicles or so, 3,000 per day over those 17 days of production in January. Now for January, I think that's fine. It should be expected that there should be some downtime around Chinese New Year. Tesla has, like I said, tried to work through that to an extent in past years, but that is a little bit of a shift, which maybe suggests that Tesla not quite as pedal to the metal on production as we have seen before. So my best guess based on all the information that we have, comments from Elon, things like that, things we're seeing in the market, Tesla, I think just pulling back a little bit from where they normally be 110%, maybe to something more like 90%, something that's more cost efficient as they wait and see how the macro evolves here over the next couple of months. Hopefully China will get through a huge COVID wave and then the economy will surge, but there are many other possible outcomes as well. Now the other possibility is maybe Tesla is doing some upgrading of the lines, maybe some sort of minor refresh, something like that. I know a lot of people hope that's the case. Maybe, I know we had those covered cars that we have seen in Fremont with the front and rear fenders, the covered cars that we saw in the Shanghai lot, although it seems like we have seen those before on some more research. And then maybe one of the bigger ones is that FCC extension that Tesla had requested through mid-January. So maybe something like that is a factor here, but I think it's important to just consider all scenarios and not just put all our eggs in that basket, assuming that that's what's happening. It's better to have a back and forth discussion around all the possibilities and then weight those probabilistically. All right, moving on from production in China, we do have another update on China, and this is relating to Tom Zhu, who of course we have talked a lot about, currently at Giga Texas from the latest reporting. There are now reports out of China that Tom Zhu has stepped down as the company's legal representative for Tesla in China, though still serves as the chairman. So speculation on this has been all over the place from, oh, this is an indication that he's leaving Tesla, or oh, this is an indication that he is being promoted within Tesla. To me, something like the latter seems more likely, as Zhu has been brought over to help out Fremont and of course Giga Texas. Next, we've got a report on Tesla in Taiwan. The Liberty Times is reporting that Tesla has now surpassed 10,000 vehicles sold in 2022, which is a first for an EV maker in Taiwan. With a few days left in the quarter, Tesla will likely end up doubling sales in Taiwan from last year. Lastly then, Elon did briefly join the last episode of the All In podcast. A couple of updates from that, mostly on Twitter, but he said that Twitter has reduced their cost structure by a factor of 3, maybe 4. Noted that speed is critical. Not every decision is going to be correct, but the benefits of speed outweigh that. He said to think of it more of like a batting average or a slugging percentage, and that percentage really should improve over time. He said that there will be fewer gaffes in the future, so I think that is very welcome, at least in terms of an aspiration. And he said that the next feature rollout for Twitter would probably be in mid-January. As for the general markets, he continues to believe that there will be a recession. He said to hope for the best, but prepare for the worst. And he again reiterated, as he has had many times recently, to avoid margin. All right, that is where we'll leave it for today then. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast. And we'll see you tomorrow for the Wednesday, December 28th episode of Tesla Daily. Thank you.